Eventually, economies overseas will improve. There's no such thing as an economy that's going down in a bottomless pit. I mean, even if you look at Japan, it hasn't been growing for a long time, but you could see from time to time that numbers are actually going up. Overall, though, it has been staying flat or moving sideways, but there would always be a turning point in the economy, and I'm confident that in a year or so, we would probably see better economic climate outside the United States. This has been a year of speculating over when interest rates would actually go up in the United States. One thing that we keep on forgetting is that the Federal Reserve Bank was actually created to prevent financial panic. There hasn't been financial panic in the U.S. economy in the last 6 or 7 years. And given that inflation is not really in our economy at the moment, there are no signs of inflation at the moment. We would probably be seeing inflation down the road. And so at the moment, there isn't really any need or any rush to raise rates. If ever it's going to increase, it's not going to be that high anyway. It's probably going to be 0.25. And that would probably be the start of normalizing the monetary policy stance of the Federal Reserve. Our forecast is that they would probably make 4 interest rate hikes next year, and that would be every other FOMC meeting. And so our forecast at the moment is that by next year, we will have a Fed funds rate of 1%. But bear in mind that these forecasts are based on the assumptions that the United States economy is actually going to pick up. Just like any other financial institution, we borrow money and we also lend money. If you're a borrower at the current interest rates that are actually very low, you're ahead. If you're a lender at the current interest rates that are very low, you're behind. And so the challenge of credit unions is always to maintain a balance between being a borrower and being a lender. And so you don't want to keep a lot of your assets actually long-term. Your net interest margin would actually be squeezed because now your short-term borrowing costs will be higher, and your long-term returns are actually, if they were tied to previous interest rates, then you would have lower returns than the current interest rates. So definitely it's going to put a squeeze on the net interest income of credit unions. One of the things that they should start looking into is that when rates go up, you will have credit union members who would probably move their money away from low-earning assets to high-yielding financial instruments. And so to provide a walkout of deposits, so to speak, then they would probably have to start raising rates. We have some credit unions who are actually doing that at the moment, have increased rates in anticipation of a higher Fed funds rate next year. The most common issue that candidates keep on bringing up is actually the issue of inequality. But I don't think both sides of the aisle have actually given us a picture of how they would like to address inequality. And so I think that's one of the areas that economists are actually interested to find out exactly if there are any concrete approaches or strategies that they intend to put in place once elected in office. But it gives you a very good soundbite because, let's face it, there is more inequality today in the United States than 10, 12 years ago. And poverty rate in the United States is actually much, much higher now than a decade or so ago.